Morning, Steve Freed in Chicago with the morning grain comments. Happy Wednesday to everyone. I think the market's going to be watching some of the outside influences with some of the tensions increasing in the Far East and also in the Middle East, and just kind of seeing how all this kind of plays out. It seems like the tension's getting a little more, and it adds some uncertainty to the financial markets, to the interest rate markets, and also into the precious metal markets. Beans are up about 4 cents. Corn and wheat's unchanged. I think that we're still seeing too much supply of everything, and that's going against some of the seasonalities that markets tend to bottom this time of year and try to bounce a little bit on some uncertainty of the U.S. weather. As far as the weather is concerned, we keep getting noon updates that show drier weather for the Midwest starting the weekend and through most of next week. There is some rains around the western Midwest today. They're moving to the eastern Midwest, but it does look drier until the 6 to 10 day when they bring rains into the western Midwest again. So there might be this window next week to get some corn planted. Chinese ag futures were all lower. Malaysian palm oil futures were at 8-month low and the 6th consecutive day down. So that's maybe offering some resistance in the marketplace. We get the U.S. ethanol data today. They should show production down a little bit as they take seasonal maintenance for some of the plants. And there's also talk that China yesterday may have bought a few cargoes of U.S. beans to kind of plug in for their import demand. Export sales data tomorrow, we'll see if bean and wheat sales are slowing a little bit, and see if corn sales continue to remain strong. Funds yesterday, sellers of beans, meal, oil, corn, buyers of a little bit of wheat. Open interest dropped in beans, oil, and meal, went up in corn, suggesting adding to some short positions in corn. And when we look at the May contracts, as we get closer to first notice day, open interest was down about 18,000 contracts in the beans. There's still 203 open. In the corn, we were down 25,000 contracts. We still have a large number of 293 contracts open in the May before first notice. 13,000 contracts down in the wheat, and there's still 114,000. One consulting group came out yesterday and suggested by fall, assuming normal weather, D's corn will be trading down to 340. D's corn will be trading down to 325 from currently 387. Nova beans 840 from 960, and December Chicago wheat down to 446 from 471. They estimated in 2017 soybean production worldwide would be 342 million tons versus 348. Maybe a slight drop in Brazil from the record numbers this year. Corn down to 1,011 million from 1,055 million this year, mostly because of a lower U.S. crop. And the wheat 755 versus 753 this year. Lower U.S., Australia, and Canada will be offset by higher EU and India crops. So it doesn't look like we're going to run out of supply anytime soon if we have normal weather. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.